If you're a homeowner in Florida, you might be wondering, why does my homeowner's insurance keep going up? We've been seeing premiums jump drastically over the last 12 months, and some policies are being dropped altogether. What's going on? Find out today in today's episode of Rockin Real Estate News. Welcome to Rockin Real Estate News, where we answer what's rockin' in Daytona Beach real estate. I'm Alice Cooper, and today we're talking about one of the necessary evils, homeowners insurance. If you own a home in Florida, then it's very likely you've seen an increase in your homeowner's insurance over the last couple of years, or you may even have been dropped by your carrier altogether. In all honesty, we're all on the verge of an insurance crisis, and some might say that we're already there. It's a hot button topic right now that's being discussed in the Florida legislature, and an issue lawmakers can't seem to agree on. So what is it all about? To give you a brief background, the 22 Florida legislature proposed a property insurance reform bill that was passed in the Senate but failed in the House. So we're still waiting on some kind of resolution, and unfortunately it's unlikely to be discussed again until November. But here's what's on the table. The bill basically has two major provisions that would affect homeowners. First, it'd allow insurance companies to offer policies that cover only the actual cash value of a roof, as opposed to a full replacement. And then the second part is aimed at Citizens Property Insurance Company and reducing their policy count. But how did we get into this mess in the first place? There's a number of factors that play into Florida's insurance crisis, but the driving factor is quite simply the number of claims paid out in the state. It's estimated that insurance companies have paid out roughly $3.5 billion in claims in the last 2 years, and we haven't even had a hurricane. Roof litigation is also at the center of the crisis. There were 117,000 claim lawsuits filed against property insurers in Florida in 21. To put that in perspective, there were fewer than 900 claims filed in the rest of the U.S. And unfortunately, where there's money, there's fraud. And we've seen a number of unscrupulous, fly-by-night roofing companies that are taking advantage of the system. As a result, Floridians pay more than double the national average for homeowners insurance. Insurance officials blame roof damage claims as the primary catalyst for driving up costs. As it stands currently, even if your roof is 30 years old and on its last bit of life, you can make an insurance claim and get a brand new roof, assuming it was a qualifying event that caused the damage. People are essentially using their insurance policies as warranties for a full roof replacement, and when the cost of a new roof is upwards of $15,000, those claims add up quickly. So what's the solution? The proposed bill would have allowed insurance companies to sell policies that would not offer replacement coverage for roofs older than 10 years in age. Instead, roofs would be replaced by the actual cash value. In other words, roofs would be replaced at their depreciated value, so homeowners would only get a portion of the replacement cost and would need to come out of pocket for the rest. Another major contributing factor to Florida's insurance crisis is the number of companies pulling out of the state. Last year, 2 companies, St. John's Insurance Co. and Avatar Property and Casualty Insurance, went insolvent. And another 5 companies opted not to renew more than 120,000 policies in Florida. This has pushed an alarming number of homeowners to use Citizens Property Insurance, which brings us to the second part of the bill, which is aimed at reducing Citizens' policy count. Citizens is known by many as an insurer of last resort. It was created by the Florida state government for homeowners that couldn't get insurance anywhere else. It's a government-owned, non-for-profit company that insures homes that the private market won't cover. In simple terms, it's state-subsidized insurance, and if Citizens can't cover its claims, the shortfall becomes the responsibility of us, property owners in the state of Florida. Currently, Citizens rates are capped at 10% increase per year, while some private insurers have seen rates rise by more than 30%. Those sharp rate increases have pushed thousands of homeowners a week to Citizens. There are currently more than 800,000 policies, and with each new policy signed, the financial risk increases in the event of a major hurricane. If Citizen runs into a deficit in paying claims, it could lead to homeowners across the state being hit with a huge tab. Unfortunately, lawmakers have not been able to reach an agreement on the bill. After failing to pass the regular session, there were calls for a special legislative session, but according to Governor DeSantis, it will be discussed in November at the latest. Regardless, this is an issue that isn't going away on its own, and it's something we'll be following closely. So be sure to like, follow, subscribe, and stay on top of what's rockin' in Daytona Beach real estate. Until next time, rock on, rock stars.